Your 20s are a financial battleground, and the choices you make now can shape your entire future. Welcome to our deep dive into the top 10 investment mistakes to avoid in your 20s. From the allure of a brand new car to the pitfalls of not saving early, we are tackling the big financial no-nos that can trip you up as you navigate your 20s. You're in the right place if you want to get savvy with your finances and dodge these common missteps. So if you're ready to take control of your financial future, watch this video until the end and join us on this journey to financial wisdom. Number 10. Buying a brand new car. Are you in your 20s and dreaming of buying your first car? It's tempting to go all out for a brand new one, but think twice. Sure, if you have got the budget, why not? However, most folks in their 20s stretch their finances thin, maybe cutting back on saving or dealing with debt to get that car. Here's a little secret: that fancy new car with all the bells and whistles. It's often no more helpful than a simpler, less expensive model. Buying a car is a big deal financially, and those pricey new cars usually don't give you back much for what you spent. Instead, how about looking for a good, affordable used car? Check out dealerships and online sites, or even ask around. A used car can be a smart, wallet-friendly choice. Number 9. Foregoing insurance. Think you don't need insurance just because you are young and healthy? It's time to think again. Even if you are in your 20s, stuff happens. Realizing this before you are hit with a huge bill from an accident or damage to your stuff is a smart move. Insurance is like a safety net. You pay a bit monthly, which goes into a big pot. If someone covered by the insurance has a tough break, like getting sick, hurt, or their stuff gets damaged, the insurance helps pay for it. It's always best to get insurance before you need it. Without it, you could empty your savings or get stuck with expensive loans. So ensure you're covered. Health, dental, vision, renters or homeowners, disability, life insurance, and any other kind that fits your life. A small monthly payment now can save you a lot later on. Number 8. Not contributing to a retirement account. You're missing a big chance if you're in your 20s and not putting money into a retirement account, like a 401k or IRA. When you're young, time is your best buddy for saving. Putting money into a retirement fund early takes advantage of compound interest. This means your money grows a lot by the time you retire. Also, you might be passing up free money from your job. Many companies match part of what you put into your 401k, often up to 6%. So if you chip in, they add more to it. That's like getting a bonus just for saving. Over the years, this could add up to a lot, like thousands more in your pocket. Experts suggest saving at least 15% of what you earn for retirement, and grab that company match if you can. It's a sweet deal. Number 7. Not starting to save. When young, saving money might not seem urgent, but it's super important. Many people need help to save because the future feels like ages away. But here's the deal: saving early is the best way to make sure you are financially secure later on. Thanks to compound interest, earning interest on your interest, your money can grow over time. Having an emergency fund is key. It's your financial safety net for those just-in-case moments. Think about losing your job, unexpected medical bills, car or home repairs, replacing your phone or laptop, and taxes. Without savings, these surprises can set you back. Start by saving enough to cover 3 to 6 months of your regular expenses. Whether it's a little bit in an emergency fund or a regular savings account, begin small and build it up. It's all about getting ready for whatever life throws at you. Number 6. Spending more than you earn. Spending more than what's in your wallet can be tempting. Fancy clothes, dreamy vacations, the latest gadgets. They all sound great, right? But if your paycheck isn't enough for these extras, you might reach for options like credit cards with high interest. And that's how debt starts knocking on your door. One of the key lessons in handling money: live within your means. This means your income should be enough for your expenses. If it's not, it's time to cut back on the splurging and shake up your budget. Stay clear of debt by being smart with your spending. Look for better deals, borrow when you can, and hold off on buying new stuff. Most importantly, don't shop for expensive things because you feel empty inside. Appreciating what you already have can help stop you from spending money you don't don't need to. Number 5. Taking on credit card debt. Credit card debt. It's a tricky one. Not all debts are identical, and credit card debt is especially tough because of high interest and extra fees. Credit card companies often target young folks with tempting offers like low fees and cool perks. But the truth? Many in their 20s need more time to handle credit cards wisely. Getting caught in credit card debt means you're stuck in a loop of big balances and just paying the minimum. This can mess up your credit score, and fixing it takes ages. A smart tip: only use your credit card if you can pay the whole bill every month. Already got a pile of credit card debt? Don't wait. Make a solid plan to pay it off fast. It's tough, but getting out of debt and staying out is worth it. Number 4. Ignoring student loans. Are you in your 20s and have student loans? Don't just ignore them. If you miss payments, it will hurt your credit score. A good credit score makes it challenging to get good deals on loans later. So what's the trick? Be organized. Know what you owe, your monthly payment when it's due, and how to pay. Are payments too high? There are options. Talk to your lender or the government about different payment plans, combining loans, refinancing, or putting payments on hold. Before you graduate, make a game plan for paying back those loans. Check if there's a grace period and for how long. When it's time to pay, at least cover the minimum. If you can, spend a bit extra. It will help you in the long run. Number 3. Relying on parents. Money matters can make things awkward, even with your folks. Say you blew your paycheck on fun stuff and can't pay rent. That's not just risky, it's not cool. Sure, it's great if your parents can help you out in a jam, but remember, it's not cool to keep asking for cash, especially if you got into that mess, and being grown up means handling your own money. Don't expect mom and dad to always save the day. This goes for friends or your partner too. Keep your relationships solid by keeping money out of them. Aim to stand on your own 2 feet financially. That means budgeting, paying your bills, and saving for those oh moments. And hey, start doing your own thing at home too, like cooking and cleaning. It all adds up to being more independent. Number 2. Pursuing an advanced degree without a plan. Going for a higher degree? Think it through first. Getting more education after your bachelor's degree can cost a lot of time and cash. It's a big step, sometimes meaning you'll earn more or land a dream job. Don't get me wrong, education is awesome, but you have got to be real about what it can do for your career and wallet. And hey, don't forget about those student loans. Before you dive in, ask yourself a couple of things. Is there a real need for people with the degree you want? Will the jobs and money you might get match your aim? If the answers are shaky, maybe look at other options that can still get you where you want to go. Number 1. Never learning to budget. Lastly, in your 20s, budgeting is just about covering your basics, ensuring you don't overspend, enjoying nights out, and paying rent on time. But here's the kicker. As you age, you'll see that your money has to do some heavy lifting. So ask yourself, where's my money going? Am I saving up for later? If you're scratching your head over these, it's time to get serious about budgeting. A good budget shines a spotlight on what you need versus what you just want. It shows you all those little things you buy but may not need. To get on top of this, start tracking your cash. See how it splits between the must-pays like bills and debts and the savings for your future. Don't just live for today. Plan for tomorrow too. Setting up a budget is easy. Just look at what you earn and what you spend. Ideally, you should be making more than you spend. And that's a wrap. If these tips are helpful, smash that like button and share your thoughts in the comments. Your insights could be a game changer for someone else. Don't forget to subscribe for more amazing videos. Thanks for watching.